It is actually ridiculous how long it takes to set up a live stream on YouTube. It really is as simple as clicking a couple buttons, but you end up having to do like way more than what you have ever thought. It's like when your mom asks you to do something and you do it, and then like 2 minutes later, you've done like 5 other things. It's a trap. It is a trap. We are going to get started though in 2 seconds. I'm just seeing here if I can hook this up to my iPad to make sure everything's working fine. And then we are going to get right into it. All right, I think we're good. Should I turn on music for myself? No, I think we're okay. Okay, this is the road to 100,000 subscribers. I am currently at 58. So if you've enjoyed yourself thus far, feel free to subscribe. But today I actually have a chart open in front of me and I'm going to do a full back test for everyone start to finish. So if you're watching this live, feel free to drop any questions you guys may have. If you're watching this in the future, just sit back and relax. If I'm going to be completely honest with you guys, day trading content isn't the most exciting thing in the world, right? Because oftentimes you have no idea what the person you're actually listening to is talking about, especially if you're new to his content, and you more so have to repetize yourself with a certain individual, especially a mentor, to be able to grasp the concepts they're actually teaching in that given moment. And it's going to require work on your part of showing up every single day and taking in content that's not so exciting and entertaining in order to learn this skill. So that's what I can tell you guys. So if you're here, it's a start. Make sure to keep showing up for yourselves. Like I said, it's nothing fancy. A lot of things in this industry is boring, and you're actually going to see that because what I'm going to do, like I mentioned, is a full backtesting session where we are going to trade TRGP, and we're actually going to start in August of 2023. So we're going to play up until live data, or however far we can make it in the time we're streaming here. And you're probably going to notice that I don't get a lot of trades, or maybe I do get a lot of trades in the times since I would or have or had gotten a lot of trades. That may so be a unique situation because oftentimes in day trading, you'll actually notice that there isn't a lot of times to enter in the market. And we look for certain specific moments of cleanliness and clarity to be able to get involved. So I like to start on the higher time frame. I just like to get an overall picture of the highest fractal I could possibly look at in a chart. So this time frame, since this asset has only been around since 2011, this time frame shows me all the data in the history of this asset. So I know that it was kind of like a one-sided bearish trend over here, and then ever since about September 2020, price has regained the moving averages and actually started what looks like to be an uptrend. Okay, so I'm taking that in consideration when I am considering getting involved in this market, because price went from a one-sided bearish market, then ever since this point here, which I'll actually draw a vertical line in just so we can kind of, keep it in mind for ourselves where the market actually switched, and buyers actually became in control ever since about this mid 2020 area. Now, I'm telling you, buyers have been in control, and what's making me say that? So this is a couple of things to note down. One, the story or the context of the market. So I know the story or the context of this market, if I'm just looking at it from a structural standpoint, is that price was moving down, creating lower highs and lower lows, and then all of a sudden made a random switch up that now put in a higher high, which is higher than the previous points to the left. So that is signaling money has come into the market in some sort of fashion. So that's one of the first clues that's telling me that this market could potentially be moving bullish in the short term or the long term. Now, the second thing, or the second reason that I'm more so prone to actually trading on the bullish side past this vertical line here, so past mid 2020, is because the moving averages have gone. So you see moving averages were actually above price, meaning that price was lower than the average of price over a 10 and 20 moving average. So right away, that's telling me that why would I want to buy a market that's below the average price over the past X amount of candles? So if I told you over the past 100 days, this sandwich at the grocery store has been selling for $100 over the past 100 days on average. And you show up to the grocery store and you see that for the past couple days in present time, it's actually been able to be bought at a $20 discount, right? So it's actually losing its value. So this sandwich that went from $100 that was averaging that sale price over the past 30 days in present time is now $20 less than what it once was. If you were to buy that sandwich expecting a return on value or return on investment, why would you buy something expecting a positive return on investment that has proven to you now that it's been losing its value, right? What we need to take into consideration is, I like to call it Newton's law in trading. What goes in motion stays in motion. So if you have something here that is $100, draw the line, and it's losing its value over a 30-day period, so 30-day period, and it's now at $80. Since it started this downtrend, it started a downwards motion. Expect it to stay in motion. So we don't expect a positive return on our investment if something is proving to lose its value, which is why in this side of the market, on this left side of the market, we wouldn't buy it. Now on the right side of the market, you actually see prices above the moving averages, which means that price has actually increased. So if we use that same analogy where we have this sandwich at the supermarket that was $100. So let's say, ignore the prices on the side here. Let's say right here, the sandwich is $100. And over the next 30 days, you find that the sandwich has been moving or increasing in value. So by this point on the chart, the sandwich is now $120. So it's now moving or selling at a higher price than what it was previously averaging over X time. So this is a sign that it's actually gaining value. And if we buy that, we hope that the trend that's been put in motion stays in motion. That is what I call Newton's law in trading. So now that we know that, the first thing that actually intrigued us about this market was the fact that it started creating bullish structure, which wiped out potential or bearish points on the chart, such as right there, and right there. We have that bullish structure, and price gaining or moving above the averages is telling us that price is actually increasing. So it is potentially going to continue increasing, which is why on this asset, we now have a bullish bias. So that's kind of how you can form, or two key components on what you can use to actually tell if something's moving bullish or bearish. So what I'm going to do here is I'm going to draw my labels, which may not make sense to you at this time, but that's okay. They don't have to make sense to you. I just like to label the structure on my highest time frames so I know exactly where I am. So what I'm going to do now is I'm going to trade the expected run of this high. I'm going to draw a little line there, and then I'm going to put this in a group to say these are my 2-month labels. And now on the weekly, I can now look on what price has actually been doing. And I see that price actually went through this consolidation period. So if I were to draw the consolidation period for you guys, it would kind of look like this. Then all this stuff on the inside was just kind of price playing around. You see price fell, it made a move up, and then it fell again, and then it made a push up. Now, what's interesting about this push up is that this push up, which I'll highlight for you guys, it actually made a move past all of this previous area where price was failing or kept pushing down from. So this has shown me that money at this point was strong enough to push it past all these highs right here where the market was currently or previously getting stuck at. And I like to call those points in trading a roof. So whenever I get an area of consolidation, I just like to label it a roof. Then on the bottom, you'd get a floor. Now, since I'm looking on the bullish side, you guys will learn that in bullish trends, roofs get broken and floors hold. So right here, you guys see the floors holding and then the roofs being broken. So I'm going to do the same thing I did on the 2-month, and I'm actually going to label this break past the roof. So I'm going to go to my weekly label. Oops. And this was the push. This push right here broke past this roof. So I'm going to call it the first break that signaled accumulation. And what I'm going to wait for, I'm going to wait for a pullback on my weekly time frame. So what I want to see is a pullback on my weekly time frame to somewhere. Let me actually make that black. To somewhere in this area where I can then anticipate the future move, which makes this higher low and then a higher high all the way up here. Since we can have an idea on how charts move through concepts, like one being structure is the main one, and then there's, you know, a couple others, like I don't want to confuse anyone, but you guys can use like supply and demand, you guys can use displacements, you guys can use order blocks. I don't really teach any of that stuff. My trading's pretty simple. So I just like to use like structure and accumulations and distributions and mix those in with the moving averages. But we know if price wants to continue, it has to move how an asset moves. And what does that mean? Well, sometimes as traders, we like to confuse ourselves. We like to pretend we don't know how charts move and how they have to move to get places. In the simplest form, charts move in 3 ways. So you have an uptrend, a downtrend, or consolidation. So if I'm expecting this market to move up, because we already did that higher time frame analysis where we expect price to move up, then I am simply expecting price to take the pattern of number 1. And if price doesn't take place or doesn't do what number 1 is doing, such as an uptrend, then we simply won't trade it. It's pretty much that simple. So what I want to see now is I feel like this push is extended. Now we have like 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 bullish candles in a row. These little black ones aren't significant enough for me to consider it like an actual pullback and a reset, which breaks this inner trend. So you see the inner trend is like this. I want to see the inner trend go like this. And then the weekly will actually make a big black candle down to these moving averages, where then I can look at a lower time frame and trade inside this area right here. That's pretty much what I'm looking for. So I'm going to continue playing price. We get that pullback. See, we get that pullback. Let's see if the daily time frame actually breaks structure. It does. So what I now expect, so how do I know this breaks structure? Well, price made this big push, right? It made 1 break, 2 break, 3 breaks, 4 breaks, 5 breaks, like 6 breaks up. So price at this point is overextended. You will get to realize that price making about 3 to 6 breaks up. I could even narrow it down to like 4 to 6. When price and a trend makes 4 to 6 breaks up, you are entering extended territory. What does that mean? Well, extended territory means that price has now exhausted and has to form some sort of pullback before it can continue. And a pullback on a higher time frame, so this, for example, is going to show as price or structure breaking down on a lower time frame like this before it makes its next move. And then that's what would continue the weekly uptrend. So what I'm going to do is I'm going to erase those just to get it off the screen. And then I'm going to show you guys that I am pretty certain that this trend right here is most likely going to, or has came to an end and is now going to chop around. So let's see if that actually happens. Okay, boom. So price chops around, and then you see we actually get a break up past this little roof here. And when we get breaks past roofs, we expect price to continue. But let me throw in my daily labels where this would be the first break. Then this would be potentially the second break if it continues. I'm going to, that's actually my daily and this is my weekly labels. Now what I want to see is price bounce off these daily moving averages and create something like this. That's what I want to see happen. Will it happen? I don't know. But if it doesn't happen, I do know one thing, and it's I won't be taking any trades. Because if what I expect, let me put those back on, what I expect doesn't happen, then something's not aligned with my rules and there's simply nothing to do. Let me get rid of this. So price actually makes a big breakdown. It goes back into this area of chop below the moving averages on the daily. So I simply just expect this to chop around more. It may even break down. Let's see. Breaks down more. That's fine. Some buying happens right here. Okay. And then price makes this big push up past these averages or above, makes its way above the averages again. So we now have this break here. Now I would consider this still, it's a little bit harder to spot, but since this is an area where price breaks back above the moving averages, I would consider this a roof that was broken. And why I would consider that a roof is because it still is an area that price broke out from. And the area is a little bit harder to spot because over here you have things such as multiple spots or multiple areas where it broke down again, such as here, here. And what I mean when I say broke down, just areas where bearish candles came into action and dragged this price down. So these two candles right here, and then this candle was kind of part of this down push here. So this area here, you only really get a couple down candles before price breaks back up. You don't get like that full area of consolidation like this. So what I want now is a pullback on the daily time frame. We get that. And what I expect now is the delivery of this structure, because the weekly time frame looks like it wants to go. Weekly time frame put in that higher low right here, and now it looks like it wants to go. So we are just trading what the daily is showing us. The daily has shown us that it's potentially going to make that bullish structure point and this higher low right here, where we can then trade the anticipation leading to that higher high on the daily. But for that higher high on the daily to be made, we have to go back into the 1 hour time frame and expect consolidation before continuations. That's what we expect. HP Gaming, Kanata, what's up, bro? Bro Gold. Yeah, bro. I hope you're speaking about what I'm saying as gold and not referring to the asset as gold. So this daily structure point, all we're doing is expecting to deliver it. Bro, gold trade. Did gold do something? No, I doubt gold did something. Gold's been extended for a minute. Hasn't it just been like consolidating? Oh my God. Things. Yeah. It's a little extended for me. This is so extended. What a crazy move though. Like absurd move on gold. Absurd. Crazy. Okay. So we get that hourly breakdown. Waiting for a strong push on the hourly to come in. Okay. Daily breaks back down. Okay, we got a new push on the hourly, or sorry, on the daily come in. So I'm going to put my new labels here. This was the breakout past the roof. And now we have clean pullback as well. I also like how this push came up above all these previous points in the market where price actually pushed down from. So this candle is showing me strength. Let's see if price can continue or just fails back down. Okay, so yeah, price is pretty choppy now. I wouldn't touch this. Not touching it. Price has to do something like pretty significant for me to touch it. I still wouldn't touch it here. If price makes its way past here, I will touch it, but this is just chopping around. And we get to stay out of all this action because what did I say, guys? After price failed down here, price has gone back and forth too many times in this delivery of this potential weekly structure point. So this is what I was expecting. And price is literally just chopping around. When price in a certain area, so I'll circle the area, when price is just moving sideways, like that, sideways, and it's showing you that every time it makes a break up, it's met with a breakdown like this. So break up, break down, break up, break down, break up, break down, break up, break down, break up, break down. It's literally showing you indecision and it doesn't know what it wants to do. And when it doesn't know what it wants to do, chances are it's going to act or be spontaneous. And whenever the chart's acting spontaneous, well, it's going to do things you will not expect, and it may do so very quickly. And you open yourself up to more randomness, which is potentially going to hit you with more losses or break evens. So this is why in an area like this, you do not trade. Why would you trade in an area like this? There's no consistent price action. Price is showing you it can't hold the averages to the long side or the bearish side. And every buy is met with sells and every sells is met with buys. And it's just snapping back and forth. Traders who think they can just, put a zone here and put a zone here and, trade the bounces off the zones. Sure, you can make money doing that. I'm sure you can. But do you think you can make more monies in these areas trading like that or in a trend like this? No brainer. No brainer. You make more money in an actual trend rather than just pressing on the buy or sell button and hoping the support or resistance holds. So in this area, I simply wouldn't trade past this point here because it's just gone back and forth way too many times. And I'll either wait for price to break down like this and create something new, or I'll let price make a super big move up and I won't follow it till it's somewhere over here. Like this, right? So I'll literally put those things back on. Ah, shoot. It got rid of my drawings, or it won't let me go back to it. But now price has made like a super clear move out of this whole area. And it actually created a little reset here. So the weekly time frame actually broke before it made that big push up. So I'm actually going to have to wait, as per my rules, for a new a higher low to come into play like this before I can start watching this market again. Because I would label this as a new weekly break. So I'm going to put this as a white label. And then this would be the first high that gets ran as per or since the last accumulation break. So the accumulation is through this point here. Let me put that in the weekly category. Let me put a lot of these in the daily. Put that back in the weekly. Okay, should be good. So let's get that weekly pullback. Oh my God, price just takes off. which is fine. Price is going to take off without you sometimes. And we now get a little pullback here. We expect price to move sideways for a certain amount of time. Right here. So I was unsure if this was like a reset here. So I waited, and then this proved to be a bigger consolidation. And now this point here, or this push here, is showing me that it could potentially be pushing out of this consolidation. So I'll label this as a roof, because we know when price pushes past roofs, the next thing we can expect is a trend. Okay. So let me label this. This is the push past the roof. This is the first high to be ran in this potential uptrend. Let's see what the 1 hour does here in this higher low area. Okay, price makes a push up. I want to make sure on the daily time frame. Okay. No. I don't like this. I would have wanted it to pause right here, but it failed down. So not for me. Now I would still consider this. I don't think structure failed here, but I wouldn't trade inside of it. Just because the moving averages don't look how they usually look when I take my trades on the daily. And because something doesn't look or isn't aligned with what I'm used to seeing, I'm not going to trade it. So I'm going to label this here, not a reset. Not a reset. Delivery, but I would not have traded this area. Simple. Simple, simple. Not simple though if you haven't put in the work. A lot of work is needed to identify points in markets where you would or you wouldn't look. So yeah. Put that in there. Just going to look at the price action inside that area. Okay. So price on the 1 hour breaks past this little mini roof, which also signals accumulation. This is the first breakout, proving that accumulation. This is the first potential high to be ran. 1 hour time frame. Go down to the 10-minute. We expect some sort of reset to come into play here somewhere, or some sort of breakdown. Which, oh my god, this trend just wants to go, go, go. Yeah, I don't see a reset yet personally. That's a crazy trend. Oh my god. Now this is just like overextended for me. Like it's very rarely you'll see something just deliver straight up in a range this big. So I just expect a breakdown and go. And look at that. Price does exactly what I said I don't see it doing, because price can do whatever it wants. So let's now expect price to create a third high on the daily time frame before it breaks down. Here's a pause that is intriguing to me, because this breakdown is met with a break up past this mini roof, signaling accumulation past this area, and there's slanted moving averages to the upside. But this is way too big, because if I would have entered this trade, my stop loss is way too big. I simply wouldn't have entered that trade. No chance. Okay, price makes this big push up. I'm looking to trade the delivery of this high right here. What do I mean by when I say trade the delivery? Well, I'm looking to get positioned inside to trade this delivery here. And if I'm positioned here, then I make profit all the way up here. Oof. This would have been my entry, but the market gapped it on open, so there's simply no entry there. That would have been a beauty trade too. This would be a trade. This would be my first trade in the whole back test. We've played, oh my God. So we went through like October 2023 to July 2024. We've almost went through a full year of data, and just now I'm getting my first trade. That's crazy. So my buy stop would have been right here, And then my stop loss would have been right under there. I move my stop loss to 2RR when price reaches 4RR. So my stop loss would have went right here. When price reached this point here at 4R. So you can see the risk to reward is 4R. And then price would have actually gapped me down right here for plus 1.69. So plus 1.69. That's actually what I would have gained on the trade. Would have been 2RR if this candle didn't gap down at open. But when the market gaps wherever your buy stop or sell stop is, well, then that's where it'll be executed. And for me, it should have been executed here, or I was planning to have it executed there, but it gaps down and ends up being right there. So plus 1.69, it's a winning trade, but in a year of data, you'll see that sometimes it's a loser or multiple losers you get. Doesn't mean you're doing anything wrong. That's an important thing to understand. Does not mean you are doing anything wrong. But yeah, I'm getting tired of talking. So what I think I'm going to do is I'm just going to put on some music. And then if someone or anyone asks any questions in the chat, I will 100% answer them. Let me make sure my desktop audio is off. Perfect.
celebration. He's out.